I'm working on a new post this weekend for my newsletter. It's going to be on my current highest conviction deep value stocks. These are stocks that I've covered on my newsletter over the past couple of years that when I found them, they were below net current assets or net tangible asset value. In other words, there's really cheap stocks valuation wise versus the balance sheet. There's a lot of them. There's like 12 of them. So I'm going to break it up into two parts. It's going to go out to all my free and paid subscribers. One of the stocks I've covered in the past that I still have high conviction on is FuelCell, FCell. This one, to me, the growth potential is just the really biggest thing about it. In my mind, the tech industry now sees fuel cells as a viable alternative after the Bloom Energy hyperscaler deals. And fuel cells says they're in talks with hyperscalers. So that's a win-win as far as the growth goes. I see eventually they're going to, at the least, at the minimum, I just see them getting a lot of power backup deals just to back up data center power backup. These data centers, the power backup's an important thing, and fuel cells are really good for that too. And they go hand in hand with solar too. That's the thing I like about fuel cells. One of the other highest conviction ones is Kronos Group, CRON. And Kronos is just a really great company that it's really misunderstood because it's lumped in with all the other cannabis stocks. They're really focused on international growth, and the stock has like a pristine balance sheet. They have no debt. They have tons of cash. They're backed by Altria, and they're members of Altria. They're on their board, and the growth potential here is huge, regardless of whether or not the U.S. federal laws are relaxed and it's legal here. They're still growing really tremendously. They just bought a production facility in Netherlands, and they're big in Israel and Canada. They have some top brands. A lot of growth coming, and the management executes really well. Margins, they've been able to maintain 40% margins pretty regularly, and I see that being a big thing. Another one is AOUT Outdoor Brands, American Outdoor Brands. This was a Smith& Wesson spinoff. Smith& Wesson, the firearm manufacturer, they spun this company off. It's got a lot of good brands. They got the partnership with Smith& Wesson, the licensing, and so there's like a synergy there with the Smith& Wesson brand. And it's just a really conservatively run company too. They do pretty well on margins, and they haven't been profitable every quarter, and they're not consistently profitable, but they have generated a lot of free cash flow and they have revenue growth. The company is still really cheap versus assets. It's still right around net tangible asset value. The net tangible asset value right now is like 110 million or 100 million, and the market cap's 118 million. It's like a tiny company that's just really underfollowed and has a lot of potential. Even in the medium term here and the short term future here, looks like they're getting some picked up along with the rotation into Smith& Wesson. Smith& Wesson has had a pretty good run here the past couple months. And another firearm stock that most people don't know about is PAL. This one, they actually have been doing pretty well. They sold off their worst performing segment. They sold off the ammo manufacturer, it was like a terrible company. So now they have the largest firearms online broker.